Ladies and gentlemen, Kim here, and welcome to the Daily Update. Hope you guys had a good day trading today. Market is down about 1.2% there. On the S&P Nasdaq, down about 2.3%. Semiconductor got hit 4.3% negative for the day. Dow held up a little better. However, it's down 1%. Nonetheless, Russell 2000 got hit along with the transport down close to 3% today. Banks 0.6%, energy down 1.5% along with the biotech. Looks like healthcare is green along with the utilities today. Looks like home builders down though, along with the retail and emerging market. Bitcoin flat, gold, silver, miners down quite a bit today. Dollar up, oil down, treasury bond down, VIX popped quite a bit. Let's deal with S&P 500 ETF. Spider, 65-minute chart here. So this is where we closed yesterday, and it looks like we actually gapped down. So this is where we opened up right here this morning. I think the setup that we had yesterday, just everything looks so bullish, and I wonder, market kind of figure that everybody's kind of jumping into this market. When we did see that kind of V-shaped reversal, it was one of those kind of what I like to call shenanigan gap down this morning. And it looks like you see that upper wick here. So bulls kind of, they were pretty rattled this morning. They're trying to bring it up as quickly as possible. But what happened is when the gap gets filled, remember, this is where we closed yesterday, and this is where we opened up. So there was this down gap. First of all, let me tell you this. And if this gap actually remained open, do you know how worse it's gonna be? And we also talked about the fact that big boss pairs are hanging around in this vicinity, right? Bulls had a chance to fill that down gap, right, a couple of weeks ago, and they failed to do that. And this is the consequence that bulls have to face. Again, the big bears, the boss bears, right? The little ones are dead, the big boss bears are still defending this level. So with that down gap still open, can you imagine if we had another down gap today, right? I actually have to say that this upper wick that we see here, it actually made things better. Look, not looking at things in a short to micro term, but if I look at things like maybe short to mid term, it's a whole lot better as far as overall sentiment is concerned, that this down gap was filled quickly. And that's how we see that long upper wick here. I mean, this is like colossal shooting star candle that is kind of wrapped around with the poopy candle properties, right? And so we got the long upper wick, little, pretty big size, candle body there. And instead, that's a shooting star candle, pretty high wave shooting star candle, I should call it. And then you see ever since when that happened, what happened was we lost that micro-term moving average, and then that micro-term moving average flipped back to bearish. So you can see that light green moving average here acting as resistance all throughout the day. And a little bit of fluctuations right here on my short-term moving average. Bulls trying one more time to bring it up, but that micro term is still favoring the bears. And then once we're not able to hang on, right? Looks like this is kind of like that inverted flagging, right? You see that? That's an inverted flagging type of. And remember, we saw that bull flag right here. Well, this is inverted of that down move, sideways, and then a down move, right? So anybody who went long anywhere here, pretty much they're getting stopped out right here. And that was what the last hour move was. And now we're back below the short micro term and the short term. So what we're seeing right now is, at this point, I have to say the short term and micro term isn't gonna be a whole lot because we're pretty much dancing all around it. So I can already see that big bears are not going to make this easy, right? The boss bears are not going to make this easy for the bulls get up and fill this gap. You can see they're defending this level. This gap has been open for how long now? Remember, this was opened up back in January 18th. Today's April 5th. This is how long the bears are keeping that down gap open. I've been saying this for the last 3 months straight. As long as this down gap is open, bears still have the power to make bulls' life miserable, right? These are the boss bears. And so with that, well, we kind of have the lower high now, but we do not have a lower low. So there's no real cultivation of a downtrend or anything like that. I think there's still ways where bulls can kind of gather momentum again, possibly by consolidating, because bulls like to do that, right? Bulls like to consolidate, move sideways. Because we're in a midterm and the long-term uptrend, if you let the bulls hang around, bulls will find a way to get it back up. So here's a level that we've been talking about for a couple weeks now, right? That 449. We're back at this level. And so this is the level where bears need to break below and get down to 443 and fill this up gap. That will be the first objective for the bears, because bears, you need to keep pushing. That's what bears need to do, because if you don't keep pushing right here, if you let the buyers hang around, they can potentially make this into some sort of double bottom. There's a neckline, and with that, they'll have a much more bigger footing and able to prop themselves up in a more stronger manner to get up and fill in. And sometimes, bulls are savvy like that, especially the fact that because bulls have gathered this momentum right here, we're talking about in the last month or so. So as far as a midterm, short to midterm is concerned, we are still dealing with this move right here, right? So at this level, 449, this is a level that bulls want to defend and protect. Bears, you want to break below that and go after 443. Let's check out that oscillator and see if we can extract any more information. So this is a level. This is a resistance that we talked about yesterday, right? That falling resistance vicinity. But I must say, we didn't even able to get all the way to the top of his resistance level. We prematurely crossed down, and that effect is pretty similar to this effect, right? Not able to bring that oscillator all the way to the top or all the way back to the resistance level shows weakness. So buyers definitely feeling a little bit flustered today because there's some sort of a shenanigan gap down this morning, because I think a lot of buyers so sure that this is at least going to go to 460 or above, and then bears just kind of came in and kind of destroyed that dream. And with that, the oscillator, you can see we're right here. The oscillator wasn't even going to get up there and hit that level. We actually prematurely crossed down. And in that process, ladies and gentlemen, we have lower highs development happening here on that oscillator. That tells us that there is certain energy building. What energy is that? Well, bears are starting to form some sort of a strategy here to kind of slowly attack the bulls and slowly eat away from their real estate they have claimed in the last month or so. So what the bulls need to do is to break that momentum here, is to break above, right? This downtrend resistance on the oscillator. That's what bulls need to do. We have a clear objective for bulls and bears today. Yes or no, right? That's what bulls need to do. Bears need to do. Bears already got this oscillator down with the lower highs in place. So as of today, going into tomorrow, the oscillator is favoring the bears. Bears want to bring this down. And if you're bringing it down this time, you gotta bring this down all the way to the bottom of its band. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening in glove trading tomorrow.